Here in this video, we will go over all of your Tesla stock breaking news that you need to know and why a breakout could be coming for Tesla stock here very soon. For those of you guys that are long-term investors just like I am, you don't want to see a breakout here anytime soon because this is your accumulation phase. You don't want to be buying the stock during a breakout. You want to own as much stock as possible before the breakout. But unfortunately for the bulls, Tesla stock may soon be on the up and up and breaking out. All of this and much more in today's episode. Hit that like button as well as subscribe to the channel and let me know what you think about this information down below in the comment section. Elon Musk is on X reminding you that legacy media lies as easy as they breathe and that Reuters is the worst right now. I bring this up specifically because we have seen a lot of FUD, fear, uncertainty, and doubt like articles come out about Tesla in recent weeks, and a lot of that is way overblown. For an example, Reuters and other legacy media outlets will have you believe that demand is really slowing down for EVs. In fact, rates are way too high for the average person to be able to afford vehicles in general. Yet mainstream media will have you believe this is a Tesla or EV specific problem and Tesla is somehow degrading, when in all reality it's the consumer that is in a bit of a problem. After all, take a look at consumer confidence data that we got last week. We came in at 106.7 for February, missing expectations of 115. The last 4 months, ever since September, at least so far that we have 4 months of data on this, you have been read every single month, with last month being the worst of all. So just as a warning, be very careful of any negative FUD-like news articles that you see on Tesla and even on Elon. And it seems like legacy media is starting to pick up on the fact that the lawyers that worked on getting Elon's compensation package revoked want $6 billion as compensation. These articles are going to be very misleading. It may or may not affect Tesla stock tomorrow morning, but just know this is like nothing relative to Tesla's market cap, and they're asking for stock, and if they're asking for $6 billion, means they're probably going to settle for like $2 billion. So long story short, is this a big deal? Absolutely not. It is kind of ironic though to argue that someone that created Tesla and value or the amount of value that Elon added to shareholders, to sit there and say his $56 billion comp package was too much and then ask for $5.6 billion in compensation. Something's not right there. I were to imagine they are going to get considerably less than this, maybe $1 billion, probably even less than that. So if we do in fact get any selling on Monday, tomorrow morning in Tesla stock, that could be a pretty good buy the dip opportunity. Now starting on March 1st, 2024, all customers who take delivery of a new Tesla by March 31st, 2024 and trade in their existing vehicle will receive 5,000 free supercharging miles. Supercharging miles will expire after 2 years from the date of delivery. Tesla has launched a Model Y rear seat upgrade product. The price is about $410. This adds 3 centimeters of leg support, making the rider feel more comfortable. The rider seat expansion was introduced by Tesla China for domestic use only in the fourth quarter of 2022. So as you can see here in the image, it raises this actually by a little over an inch. So it's a little bit more leg support, maybe a little bit more comfortable for rear passenger drivers. Check this out. Tesla donated a Model 3 to an agency tracking and investigating EV fires in Australia so they could burn it to help firefighters with research. And the EV fire safe chief said, quote, EVs catch fire 1/10 to 1/20th as often as petrol or diesel cars. So despite what legacy media might want you to believe, that Teslas somehow are problematic, unsafe, and catch fires out of nowhere, that seems to happen a lot less often than gas or petrol cars. Danny Duncan, who recently took purchase of a Cybertruck, he has about 7.5 million subscribers on YouTube, already posted a video with the Cybertruck. Take a look at this jump that he hit. Boom. yeah, and it looks like it's still riding just fine. I do also find some irony in putting the bulls, the horns on the Cybertruck. Maybe he's also bullish on Tesla stock. Mark Gurman on Apple's car plans, he says, quote, it was about to launch the Apple Watch, which it thought would crush the Swiss watch market. Apple wanted to do the same thing for cars. With that in mind, what was the point of introducing a Tesla clone that wouldn't revolutionize the industry? By the time Apple realized their mistake a few years ago, it was too late. All of the design work had focused on a car meant to have no steering wheel or pedals. The company also had sunk billions of dollars into developing a level 5 self-driving system, the highest level of autonomy. The die was cast. So he's basically saying Apple had no chance of beating Tesla. Not on the vehicle front or aspect at this point, and definitely not on the autonomous driving capabilities. Back in 2017, Tim Cook said famously, self-driving cars are the mother of all AI projects. It could create the most value to the most amount of people if a company could actually develop a software or a car that is capable of driving people. That was the reason Apple wanted to get into the car business. Apple did not want to specifically get into the car business. They wanted to get into the robotaxi business, the self-driving software business. And this capitulation by Apple, this was really just confirmation to me that if Apple can't do it, I mean, nobody else can. But Tesla? Maybe. I mean, you're actually already seeing V12 making great progress on getting to fully autonomous level 5, a level 5 state. We're not quite there yet, but Tesla is really the only one I think that has a shot of actually doing it. And for whatever reason, the markets have since forgot about what Tim Cook said and the mother of all AI project, which is self-driving vehicles. Now, this is pretty crazy. An Orlando Porsche dealership who bought a Tesla Cybertruck for $244,000 the other day is now selling it for $290,000. It's a dual motor foundation series. That's wild. A Porsche dealership bought a Cybertruck for 250% higher than, what it's actually priced for, 150% higher. And now they're trying to sell it for even more. Wow. That's insane. Heisenberg on X, he has a following of about 120,000 people. He says about Tesla, we have some really notable and clean lines here. Obviously, the moat is the most notable line of them all. And you can see this moat is the mother of all trend lines. I have this line on my chart. I have this line on my chart. And I have these channel lines as well on my chart. So pretty much identical charting that we are doing here. And, well, he's coming to the same conclusion that I am. He says the name is kind of stuck in purgatory. Can't seem to break above the psychological $200 level convincingly yet. And now there's a very obvious bear flag forming. Price likely going to trade between this pretty wide channel between the blue moat and the purple support line. Good for day and swing trading, both long and to the short side. So on the low side, this trend line right here. And on the high side, this moat, the mother of all trend lines to the upside. He says, but ultimately, I really want to see this moat break above once and for all. If so, the name will absolutely skyrocket. But what if it doesn't? And the longer we stay in this channel, then there is that 144-ish gap fill that the bears keep eyeing. I personally wouldn't short this name, either stay long or stay out. So this is what a bear flag kind of looks like, right? Where you come down, you kind of just trend higher, respecting both the uptrending level of support and ascending level of resistance. And that is what has been happening. Now, typically once you get close to a resistance level or close to some kind of important level, you can get rejected to the downside. Now, whether or not this happens, I think largely is really going to come down to what happens in the broader markets. And the broader markets don't exactly we don't have a favorable setup here over the next 2 or 3 weeks with the ARM lockup period on March 12th. We do have some earnings this week with your AI stocks, and we'll talk about that here in just a moment. We have Jerome Powell this upcoming week. We have the non-farm payroll report on Friday, and markets are at all-time highs. So if there's one direction we're most likely to go in, I would say it's probably lower from here. That could, in sympathy, also take down Tesla stock. But at the same time, I don't think all hope is lost, specifically with the broadening out of our markets. If Jerome Powell is not bearish on Wednesday or on Thursday, then I think the next move could be a broadening out of our markets as maybe liquidity pulls away from some of your AI stocks and can move into other areas like a Tesla. Now, a bull flag to the contrary is a downtrending channel to a breakout of the upside. Now, in my opinion, if you get above about 210 here, really that gap fill level of 207, then you start to break above this this channel here, and you can reject this bear flag pattern that is currently forming on Tesla. And every time a stock tends to actually reverse course, if it's not with a gap up, you start with a bear flag. So a bear flag can be, maybe a technical trading, not strategy, but, chart that you can look at, right? Different technique, but it's not the end all be all that Tesla has to fall from here. If you break above the top line, you're most likely going to continue to break out and run much further. If you break down, that's where you can get into some extended downside. If that happens, 180, 190 could look likely for Tesla, and then you would break this bear flag pattern. But overall, if you can get above about 210, then things start to look a lot better. I don't know if that happens just based on a broadening out of our markets. If we need to get some good news for Tesla, I'm not exactly sure what will cause that breakout, but I think the sentiment, the narrative around Tesla is way too negative. So it's not going to take a lot of good news to really get Tesla stock to do well here. We will go over more of this in the next video coming out at 8:30 p.m. tonight and my expectations for this week with Tesla stock. And yes, I do think this is going to be a very volatile week, and I am expecting a large move higher or large move lower. If we take a look at global inventory numbers for the Tesla lineup, you do see the Model Y, which has recently went higher in a weird way. This kind of looks like a bull flag pattern now that we're looking at this and pointing this out. But nonetheless, the Model Y inventories have come down a little bit from their highs at about 9,300, currently at about 7,300, but you're still very elevated based on historically what inventory numbers have looked like. Now the Model S, the Model X, and the Model 3 continue to fall. I'm not exactly sure what's going on with the Model Y, if there's just more production right now. We do know that Giga Berlin shut down for a couple of weeks. That's now up and operational. We know Giga Texas really continuing to ramp their Model Y production as well. So maybe, just maybe, there's a little bit more inventory right now. Tesla did do a temporary price reduction. Who knows how accurate this chart even is, but I mean, it's not great that inventories for the Model Y are this high, but it's really good that the Model 3, the Model S, and the Model X are at almost 12-month lows. Google Trends data continues to show an acceleration across the board for the Tesla lineup in general. I mean, the Model X went from 9 to 10. The Cybertruck is still at 28, which is very high, very elevated compared to where it was in the middle of January, late January, where you were only at about 18. You might be starting to see the first innings, early innings of the Cybertruck halo effect. Now, the Model Y is still at 34, unchanged there as well. The Model 3 went from 35 to 37. So the Model 3 right now is actually seeing the most search trend activity. And I would imagine that's probably because of all of the good demand that we're seeing for the Model 3 in the US. Tesla is now running about 3,000 different ads globally via Google. Lots of these are short form ads. You are seeing advertisements in Japan as well as Hong Kong, which Hong Kong is a brand new market for Tesla to be advertising in. And it does look like here's an ad in Germany. So that's a new one I haven't seen before, but lots of short form ads. really advertising the low starting price for the Model Y as well as the Model 3, the federal tax credit that brings that down, as well as Model Y leasing. Here this ad says, view available inventory, lease a Model Y from $379 a month, really trying to promote the affordability of leasing even compared to buying. I mean, they don't put the price of to get a Tesla via a loan, but it's a lot cheaper to lease a Tesla. And Tesla is indeed advertising that. I think another lever that is not pushed enough, maybe by the Tesla team, or is not recognized enough by definitely legacy media or even Tesla stock investors, Tesla at some point down the line can start to maybe do some promotional like 0% financing. Yes, of course, that hurts margins as well, but it's a lot better than actually cutting prices. And if you work out the right deal, you can do what Ford or GM is doing with some of their models. That 0% leasing option can be very attractive, or 0% financing or leasing option can be very attractive for a lot of people, and that's just really good advertising in and of itself. It seems like everyone's a little bit more self-conscious or self-aware financially on how things cost, how much things cost, how much interest they are paying. Ever since really the Rona and times have got more difficult with all of this inflation, people, I mean, they say, hey, I can get 5% in a checking account. They love that. If they can get a car for 0% interest, they love that. And that could also bring down the monthly payment for Teslas. And that's ultimately what is the most important thing, as per what Elon has said in the last 2 or 3 earnings calls now. And that's another reason why I do believe Tesla will be raising prices towards the end of 2024, especially if the economy gets worse from here and the Fed does lower rates more than expected. I firmly expect Tesla will start raising prices in conjunction with the Fed lowering prices. Let's say for every 1% of rate cuts we get, maybe Tesla raises prices by $2,000 to $5,000 across their different models, because that may bring down your monthly cost by $100 or so to finance a Tesla. That I don't think is priced into Tesla stock at all. And I do believe towards mid to late 2024, we're going to start to see margins get better, pricing get raised for Teslas, and estimates going higher for 2025 and 2026. I mean, if these analysts are looking at ARM, for an example, or NVIDIA or some of these other AI stocks, quote unquote AI stocks, I think Tesla's the best AI stock. But if they're looking at those companies and they're saying, ARM is trading for 100 times 2028's earnings, why can't you do the same thing for Tesla or any other stock? Huh? Tesla would be trading at like 10 times 2028 earnings, maybe less than that. But as rates do go lower, that also creates more value for longer term growth, because there's less of an alternative kind of asset class that can pay you, say, 4 to 5%, like you can get right now in a treasury. If a treasury pays you, let's say 2 or 3% a year from now, it's a little bit more attractive to take risk in equities and in growth stocks. Sentiment today is actually a little bit better than yesterday, which is surprising on a weekend. You tend to get a little bit more bears that come out, a little bit less message volume here on StockTwits. Sentiment yesterday was 47. Today it is 49. So that's a little bit of an improvement there. Overall considered neutral. Message volume is down a little bit, which is basically what you'll see every weekend. Yesterday was at 38. Now it's at 34. But the participation ratio is actually going up today. It was 55 on Friday. Now it's 57. So that means more people, more accounts are talking about Tesla stock. On Friday, Tesla had 527 orders, totaling $329.63 million, with a positive order value of 60% from hedge funds and institutions. As of last record, Tesla had short interest of 3.2% and $17.9 billion currently sold short in the stock. If you do get the right turn of events, if you do get, the markets turning a little bit more bullish on Tesla for any of the reasons I mentioned in this video, you do have a lot of short positions that need to be bought back. About 89 million or so shares are sold short. So that is quite a big deal. Even though you're only 3% sold short, I mean, 90 million shares to get bought back is really nothing to sneeze at here, okay? Now, you also have cost to borrow fees around 9% for the cost to borrow max. That does suggest there is a lot of shorting activity that we've seen on Friday, which could explain that rejection we've seen from the mid 200s down to where we closed around 202 or so. Tesla's RSI is at 52.98, so definitely a lot more room to run there. And the MACD line is still negative about 1.5. If that thing does go positive, which it looks like it's going to, that could lead more algorithms to buy Tesla and more traders to also buy Tesla. In my personal opinion, the next move is likely to be higher for Tesla, but we do have to go through all of the data coming out this week, all of the events for this week, all of the earnings, and discuss what that could do for the markets. And in the next video, we will go over a price prediction for Tesla stock by the end of this week and what I think is coming next. So that's going to do it for this video. Hit that like button as well as subscribe to the channel. If you guys want to come trade with us live in real time, check that link out down below in the description of this video. 3 stocks that I'm specifically looking at for earnings this week: Target to the upside, Costco to the downside, and Broadcom maybe both ways, but probably to the downside. I'm going to provide my thesis and the data behind those 3 earnings trades. By the way, they are the stocks that are pricing in less than 10%, so I think they could maybe move 20%. I think if any of our upcoming earnings this week could give you a decent mover, a big potential win, I think it would be any one of those 3 stocks. So we'll see. If you guys want to come see the analysis, come join the trading community and get my insights. Link down below in the description of this video. Also, follow the X account. It is free 99. It costs you absolutely nothing to do so. It's Michael Tyler over there. It's pretty easy to find. Share a lot of great insight, charts, statistical facts, and data on our markets, and even what the options market is pricing in for these earnings in this upcoming week. Good earnings and bad earnings. Some to stay away from and some that are pretty attractive. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.